record this session. So let me hit recording. There we go. We record our webinars, as you know, so we can post them on the website and we can make them accessible to others who might have not been able to join live today. So slides and recording will be available on the website, on the Iris Plus website after today's session. As you all know, you're expert Iris Plus working group members, so you know we are going to keep you all muted throughout the presentation just to preserve audio quality and minimize any background noise. But we're going to open up to Q&A towards the end, and we really, really want you all to participate. So please use the chat box as we go to start putting out there any thoughts, questions, comments. And then when we get to the Q&A, you can raise your hand or unmute yourself. We want to make this a very dynamic and participatory session. So please start using the chat box at any moment, and then we'll open to Q&A towards the end. So let's go to our next slide. Great. So the plan for today, we'll start with context setting, a little bit on impact performance and the work that we're doing at the GIIN for this. For those of you who joined our first session, which was last Monday, you probably heard this already, but we know many of you, we're looking at you, many of you were not able to join that first session, just so to make sure we all start from the same level of understanding. We're going to do a very quick overview, and then I'm going to pass the mic to my colleague Noshin Nuva, who will walk us through the impact performance study. So going from the approach and collaboration to the key learnings and results from the financial inclusion study. She'll also she'll do a little demo and show you the analytics that we have. And then we'll talk about, what else is coming next and open to Q&A. Some of the things that we'd love for you to keep in mind, I'm going to make sure the line is muted for everybody. As we're going through the slides, what we'd love for you is to start thinking about whether the findings that we're presenting resonate with you, or if you find anything surprising. So that's something we'd love to know. We'd also love to know how do you think that these performance analytics can help you with your decision making as investors, and also if there's any other different type of analytics or analysis that would be helpful when it comes to impact performance. So keep those questions in the back of your mind as we go through the slides, because this is part of what we want to open up during Q&A. So with that said, now as a little bit of an intro and overview, let's go to the next slide, please. As you probably all know, at the GIIN, we dream to create a world where social and environmental factors are routinely integrated into investment decisions as just the normal way of doing business. And let's go to the next slide. And to that end, we have a strategy that has 3 key pillars. The first one is around mobilizing more capital for impact investing globally, so it's helping grow and scale the market. The second one is safeguarding the integrity of impact investing. So we want this market to scale, but we want to make sure that we're safeguarding its integrity. And a lot of the work that at IMM with Iris Plus, we do talks to this area. And this is also what the impact performance studies, what the heart is. So with Iris Plus, we set the standards and best practices, and then the impact performance studies build on these standards and best practices to drive impact performance analysis. So this is a lot of what we are going to be talking about today. I mean, some of you also have been joining the conversations on the development of the Iris Plus list. That's a different functionality that will help bring more transparency to the market. But really the focus of today is on understanding impact performance. Let's go to the next. So as you probably know by now, advancing the understanding of impact performance is one of the GIIN's key priorities. And we do this in 2 very complementary ways, which is what we're going to be talking about today. One is with Iris Plus. So as you know, Iris Plus is a system, and it helps us measure and manage and optimize impact data. And what it does is that it standardizes impact data. And it gives you not just, the metrics, as you know, but the evidence base, the core metric sets, the resources, all in one place. The impact performance studies build on the Iris Plus evidence base and the core metric sets and the metrics to structure the analysis that they do. and so be able to then understand aggregated performance at a sector level. There were 2 original studies that came out in October of last year. Those were our pilot studies covering housing investments and clean energy investments. And now these last 2 that came out a couple of weeks ago, one on agriculture investments and the other one on financial inclusion. So today, what we're doing is just deep diving into the results of the financial inclusion impact performance study and discussing with you all what are we learning from that, what is helpful, and what else we can do to help advance the use of impact data for decision making. One other thing to highlight also is that impact performance analysis are laying down the foundation for performance analytics and tools like benchmarks, ratings, and indices. And so we'll do a demo also of that during the presentation. You may know this, or some of you have questions in terms of the development process of IRIS Plus. So we usually start all our thematic development with the Navigating Impact Project. Many of you I see on the line have been part of these conversations. This is where the GIIN partners with thematic experts. So for example, we just launched the quality jobs theme in partnership with the ILO, or the climate change mitigation in partnership with CSS. So we're actually to identify the recommended metrics, understand the research, the evidence, and sorry, let me just mute those lines. And then what the recommended metrics and research and resources that comes out of the Navigating Impact Project, we then put it through what we call a rigorous standardization process. It goes through public comment before it eventually comes out into IRIS Plus, and there's where you see the core metric sets and whatnot. The impact performance analysis, as I was saying, the impact performance studies really build on a lot of what we, the core metric sets and the evidence base and whatnot. And actually, this graph doesn't show it. It looks like a linear graph, but a lot of what comes out of IPS also feeds. It's a feedback loop that feeds into IRIS Plus. So what we learn about, the use and the availability and the feasibility of certain metrics and whatnot. And let's go to the next. And so what you see here is, as you know, we're an ongoing development process of IRIS Plus. What's on the left-hand side and orange are already all the themes that are on IRIS Plus. These include the evidence base, the research, the core metric sets, and whatnot. In the middle, in green, is what we are in development. So, for example, quality jobs, WASH, and climate change mitigation are all completed through the Navigating Impact process, and now we're going through the standardization and the public comment period. So you got today actually an email from me, and you probably got the newsletter around the the public comment period that opened on quality jobs and WASH. And then on the pipeline are the different themes and categories that we have for next in terms of development. And so when we look at this, let's do one more click. What you'll see here is that, what we're doing is working together, on the impact performance analysis to be able to bring to you themes, the thematic work and the core metric sets together with the analysis and the impact performance together. So impact performance studies that are available already are in financial inclusion, energy access, smallholder agriculture, and affordable housing. And the next set of impact performance studies will focus on quality jobs and climate change mitigation. Great. So with that, Nova, the floor is all yours.
Thank you, Leticia, and thank you so much to everyone who joined today. My name is Noshin Nova, and I'm a research associate in the research team. And I'm super excited to share with you this project that we've been working on over the last year and share some key highlights and findings and learnings from the Financial Inclusion Impact Performance Study. But before I get to that, I wanted to walk you through the main elements of this research process, to share some context in how we built these 2 reports specifically, being in financial inclusion and agriculture. So these are the 3 major steps. We start with a detailed scoping process to make sure that we're capturing the right information with relevant context and nuance, and to sense check some of our thinking around the kind of data we're hoping to collect, analyze, and report on, For these studies, we spoke to dozens of impact investors and field builders like SPTF, CIRIS, and CGAP, organizations with a lot of deep knowledge of the specific topics that we cover in this sector. We also worked closely with our IRIS Plus team, for example, to align to the core metric sets and the evidence base, but we'll speak much more to that in a little bit. And then, of course, we collect data and also conduct one-on-one calls with nearly every participant in our study to walk through their submission to fill in gaps and further understand that context and weave that into our analysis. And then we move on to the fun part, which is analysis, which looks at three core components. Normalizing the data to bring it to a comparable scale, using evidence to understand outcomes, often based on outputs data that are more readily available and reported. I'll touch a little bit more on that in the next slide. And segmenting and clustering the data to understand variance across key market segments. And I won't go into the details of this methodology today, but will encourage you to look at the methodology discussion paper that's publishing this Thursday, as well as join the fourth session in this IRIS Plus webinar series on December 2nd, which will be focused solely on that discussion paper. With that, let's dive into the results. So the financial inclusion sector is associated with a long track record of impact investments and was also the second fastest growing sector in the industry over the last 4 years, as per the 2020 annual survey. Yet 1.7 billion adults around the world continue to lack access to basic financial services. So we're still pretty far from providing responsible and affordable financial services to every adult in the world. But this is where impact investing can and is playing a role. For this study, we collected annualized impact performance data from 46 impact investors, managing 54 funds or investment vehicles that have collectively made 491 unique investments in this sector. Some investments provided impact performance data for multiple years, resulting in nearly 800 observations. So a quick overview of who the investors are. Most of them, over 80%, are asset managers, mostly for-profit asset managers who seek market rate returns. And then we also have a couple of DFIs, foundations, and family offices in the mix as well. On average, investors manage $939 million US, but that's clearly driven by some large organizations, a couple outliers, as we see with the much lower median AUM. Most investors are headquartered in developed markets, primarily the US, the Netherlands, and Switzerland, and 21% are headquartered in emerging markets, mostly sub-Saharan Africa and India. And in terms of impact measurement and management, 73% of investors use the SDGs, followed by 60% that use IRIS and 53% that use IRIS Plus. Moving on to a snapshot of some key investment characteristics. So a pretty large chunk have been made either through private debt or private equity. Unsurprisingly, nearly 60% of investments have been made through private debt, which also aligns to the fact that nearly half of all investees in this sample are small microfinance institutions. But we also have a fair share of fintech companies, just under 20%, and most investees were in the venture stage at the time of investment. Over 90% of investments in this sample were made into emerging markets, primarily in South Asia, Latin America, and Sub-Saharan Africa, collectively accounting for nearly 75% of investments. Respondents also reported realized returns and performance relative to their financial and impact expectations. The majority of investments met their financial targets, which were almost fully market rate returns across the sample. And private equity investments reported slightly higher annual returns than private debt investments. And you can find more on that in the full report as well. Respondents were also asked to share how they engage with end stakeholders. Sorry, this is not in the slide, just a side note I wanted to add. You'll find more in the full report, but nearly every single investment in the sample, 99%, involved some form of engagement with the end stakeholders, even though in most cases it was through the investee organization. And here's a quick breakdown of the types of financial products and services that these investments enable. Pretty skewed towards credit, as you can see, but these other products and services are often offered bundled with credit. And we see this as an increasingly common trend in the sector as questions around long-term impact outcomes and improved resilience become more prevalent. So as we briefly touched upon earlier, we really worked to deepen the analytic methodology of this kind of research and move our focus towards outcomes assessment. Unsurprisingly, a lot of impact investors are collecting mostly outputs data. Those are usually the ones that are available for investors to collect and report on. For example, the number of loans dispersed or the number of individuals served. So what we've developed is an approach to pull together a variety of those output metrics, more specifically IRIS Plus metrics, that are standardized and evidence-backed, and build an impact pathway, as you see here. So these are founded on the IRIS Plus core metric sets. We build each pathway by assessing the output metrics we have available, the outcome indicator for that particular pathway, and the IRIS Plus evidence base that is associated with that pathway. We also use the IMP and IRIS Plus dimensions to further understand the impact indicated by those output metrics, namely who, what, how, and risk. And each pathway is structured along those dimensions, as you'll see in the report. And I'll also quickly walk you through the structure as well. So, reflecting on this approach, we think it's meaningful for several reasons. Firstly, it allows us to move beyond outputs and speak to those deeper impact or outcomes that could result from impact investments, because most investors aren't conducting rigorous evaluations or studies due to a range of constraints. And, we don't expect them to. But we hope that this approach can at least provide us with an indication of the likelihood of achieving certain outcomes. Second, data on outcomes is something that a lot of investors are curious about and want to track, primarily because they want to measure progress towards their own impact objectives, or they want to invest into the most impactful segments of the market, and even to communicate their impact to a wide range of stakeholders outside their organization. That said, it is important to note that we focus mostly on short-term outcomes, as highlighted here, but don't necessarily have the data or the tools to map to longer-term outcomes yet, which might be better suited right now for evaluations or randomized control trials. All that said, we present to you the 4 pathways in this financial inclusion study. Number 1, decreased reliance on solely informal networks. Number 2, increased spending on basic services such as education. 3, accelerated business expansion. And last but not least, improved financial resilience. And what I'll do is I'll briefly walk you through each of the 4 pathways, why they were included, what they focus on, and some key takeaways, but would also really encourage you to take a look at the full report where we have detailed the analytic process for each. That said, let's dive into the first pathway, enabling decreased reliance on solely informal networks. So this pathway looks only at investments that provided first-time access to finance in populations that previously only had access to informal alternatives, like friends, families, or community groups, or even predatory informal alternatives like loan sharks or no access at all. So let's look through what impact is like across some key dimensions. In terms of who is impacted, most investments in this subsample target the unbanked or underserved populations and businesses lacking access to finance, primarily really small businesses. A top IRIS Plus strategic goal within this pathway is improve access to and use of responsible financial services for historically underserved populations. In terms of how change happens, MFIs, microfinance institutions, and non-banking financial institutions are the primary providers of first-time access, and the large majority have client protection policies in place, and nearly 60% provide bundled products. And in terms of the impact risks faced, most investments in this subsample noted significant external risk, such as commodity pricing affecting smallholder farmers' repayment capacity. Of course, the how much dimension runs across all other dimensions, but here's a quick snapshot of the impact of the average or typical investment in this pathway. During a 12-month period, a single investee provided over 136,000 individuals with first-time access to formal finance on average. Also, every single investee in this subsample analyzed repayment capacity prior to loan provision. Given that this only reflects the activity of a relatively small segment of the full range of impact investors in financial inclusion, and that the scale of problem is so huge, it's not surprising that on average, a single investment addressed 0.3% of the population of unbanked adults in the countries of investment. So one dimension that you don't see on this slide and in the coming ones is contribution. But we do share insights on that for each pathway in the full report, primarily around the timing, terms, and level of stakeholder engagement of an investment. Moving on to the second pathway, increased spending on basic services such as education and healthcare. In this particular pathway, we dig deeper into the types of loans being provided, like education financing or home improvement financing, and consider loan quality indicators to assess that these are responsibly provided loans. In terms of what impact looks like across the dimensions, a significant chunk of these investments target women, primarily in unsaturated markets with few other formal alternatives. A top IRIS Plus strategic goal within this pathway is increasing gender equality through financial inclusion. In terms of how change happens, microfinance institutions and fintech providers are doing most of the lending. The majority analyze repayment capacity, and a third are aligned to certifications. Most investments in this subsample noted significant execution risk, such as scaling loan provision in remote rural areas. And here's a quick snapshot of the impact of the average or the typical investment in this pathway. During a 12-month period, an investee within each of these loan categories provided over 235,000 loans for personal and emergency use, 203,000 loans for education, and over 194,000 loans for home improvement. The typical investment reached 0.7% of the population of individuals excluded from formal credit in the countries of investment. Next, we have this pathway, accelerated business expansion, also focused on loans, but only on business financing and working capital loans provided to MSMEs, which naturally vary from loans to individuals in terms of loan size, EIR, and effective interest rate, and even client protection policies. So most of these investments provided loans to micro enterprises and small enterprises. A top IRIS Plus strategic goal that investments in this subsample seek to address is supporting the creation of jobs and fostering economic development. In terms of how change happens, a big chunk of the loans were made aligned to the SMART campaign client protection policies, mostly by MFIs in rural areas and fintech providers in urban areas. And investments in this sample noted significant execution risk, such as working with investees where operations are geographically dispersed. The typical investee in this subsample provided over 190,000 loans to MSMEs and supported over 2,000 jobs at the investee company or the end MSME client, and reached just above 6% of the total number of credit-constrained MSMEs in the countries of investment. In the report for this particular pathway, you'll also find analysis that compares our findings to the estimated MSME financing gap in the countries of investment. And lastly, we wrap it up with improved financial resilience, where we dive deeper into bundled products like savings and insurance provided alongside credit that are geared towards improving clients' ability to manage financial shocks over the longer term. We focus only on active clients in this pathway to really drive home the point that simply having a bank account with a financial services provider may not strengthen long-term resilience, but it's actively using that account is what actually ultimately contributes to improved financial health, especially during times of financial shocks. Given that you're super familiar with the structure, and in the interest of time, I'll quickly walk through this one. Nearly half of investments seek to impact women, and 70% served individuals in rural areas. The top IRIS Plus strategic goal here is improve access to and use of responsible financial services for historically underserved populations. In terms of how change happens, client protection policies, nearly every single investee, upwards of 95% have client protection policies in place, and nearly 80% are aligned to the SMART campaign client protection principles. And in terms of the risks faced, external risk was the most common, specifically citing regulations, political volatility, and economic uncertainty in the countries of investment. Since this pathway looked only at active clients, a key metric reported was the number of active clients that the typical investee reported. This figure is particularly high, partly because active clients are clients that are accrued over time who are still making active transactions with the investee, such as fixed payments on a loan. It may also be driven by the fact that a large chunk of investees in this subsample are fintech companies operating in urban areas, which are much more likely to have more clients than, say, a microfinance institution in a rural area. So that was a lot of data. Thank you for bearing with me. I'll definitely encourage you to take a look at these pathways in the full report for additional insights, further breakdown of results by segment, as well as see some qualitative color to all of these numbers. For each of these pathways, we have a spotlight, which is a short write-up of the amazing work that's being done by impact investors and investees to make progress towards each of these outcomes. I totally forgot to acknowledge this yellow circle here, which is that on average, an investee in this sample reached 0.87% of the total number of adults in the countries of investment. That said, to summarize some of our learnings, as you see through these pathways, a number of themes apply across the sector. Impact investments in financial inclusion reflect progress towards 4 key outcomes as we walk through. Investments reflect a commitment to moving beyond access and towards usage. This is reflected in the fact that 82% of the nearly 800 annualized investments in this sample track the number of active clients, that particular metric. And almost half of investees in this sample provide bundled products. Number 3, nearly universally, investees have client protection policies in place or analyze repayment capacity prior to loan provision or align to industry standards and certifications. And last, but of course not least, opportunities for further impact investment and deeper impact remains, particularly in reaching previously underserved populations and even through gender lens investing. Just under 40% of investments in the full sample target women, and a third of all investments in this sample target the IRIS Plus strategic goal, increasing gender equality through financial inclusion. And we see this resonate with the number of female clients reached. You'll see those figures in the full report as well, particularly in the second pathway that we walked through. Of course, these represent just a starting point of our understanding of impact in this space, and just one segment of the impact investors in financial inclusion. With more data, we can unpack deeper insight into each of these findings. I realized this was a lot of information, so I'll pause for 2 minutes here, given our time constraints, to see if folks have any questions or comments for us.
Hi, everybody. Feel free to use the chat box if you have any questions, or you can also unmute yourself and just ask a question. I think it will be wonderful to hear from you if these results are resonating with you, or if you find anything that is surprising, or if you have any questions in particular about what Nova just shared. Please feel free to use this time.
Also okay if not, because we do have for you a very exciting analytics demo right after this. But I'll wait a little bit to see if folks want to share any thoughts or questions.
Yes, and please, again, like you can unmute yourself or you can use the chat box. I know there's a few people that called in, and that might be a little harder to use the chat box, but most people are on the computer. So yes, feel free, and you can even say like, yes, resonates, surprised, or whatnot. But we assume that you all decided to join this meeting to learn more about this particular impact performance study in financial inclusion. So would love to hear what your thoughts are.
Hi, I just had one quick question. This is Walter Escobar from the California Endowment and the Impact Investing team at TCE. It was more of a point of clarification, just to make sure I'm understanding the actors here correctly. Wanted to make sure that in terms of the MFIs, because there were a large proportion of the actors here, they were the entities that investors invested in for MFIs to then deploy capital. Is that right? And then my second question is for the startup, being one of the most common business stages, if you will. Is this in turn what the MFIs, for example, if it could have been individuals trying to start up their own small business or their own startup, the startups were the most common entity being invested in by the MFIs? Do I have those actors correctly? Thank you.
Great questions, Walter. To address your first one, yes. MFIs are the ones that are receiving capital from impact investors that are primarily for-profit fund managers, foundations, DFIs, and family offices. So MFIs, fintech companies, and BFIs, SME financing, these are all the investees that they invest into. To your second question, by stage of business, we were also referring to the investee stage of business. So most of the MFIs and fintech companies and NBFIs, most of them are in the venture or growth stage of investment, and investors are investing into these growth stage companies, particularly in emerging markets. Does that clarify, Walter?
Yes, thank you. And then lastly, just going back to that first part around MFIs and fintech companies, do we know a little bit about the split? If it was like, I don't expect exact numbers, but maybe like, was it like a 60-40 split around there? That would be helpful to know.
Do not cite me on these, but I'm pretty sure it was MFIs were the large majority. I'd say around 60%, with fintech companies being 20% roughly. Okay. And then we have other organizations reflected there as well. Another one, sorry, going back to your second question around stage of business, I'll also note that this was at the time of investment. So the stage of investee's business when the investor allocated capital there. So there has been some maturation in these MFIs and fintech companies since then.
Perfect, thank you.
Of course.
Thank you, Walter. We have a couple more questions, and Nova, I'll leave it to you. Let's take on these questions, and then when you want to move into the demo as well. But Fabienne asks, it was not clear for me how to measure and improve the financial resilience. So I can talk on that on the IRIS Plus, on the financial inclusion theme and how it's addressed in IRIS Plus. But Nova, is there anything you want to mention on your end, or do you want me to kick it off with how we addressed it in IRIS Plus first?
I'll just very quickly add, firstly, great question, Fabienne. So very quickly, that particular pathway, which is improved financial resilience, looks only at active clients and looks only at products that were provided in addition to credit. So we look at savings and we look at insurance. It's not just the loans, it's having that savings account and having those insurance policies and actively using them is how we measure resilience. And of course, this is backed by the IRIS Plus evidence base, which is where I'll pass it over to Leticia to elaborate.
Great, thank you. So one, on the financial inclusion theme on Iris Plus, one of the strategic goals that we have is around increasing financial health. So financial health and financial resilience, both, look at, the same topic, you might call it in different ways. And we build it around financial health framework of CGAP and the World Bank. And so as Noah was saying, there are different ways in which you can try to tackle, improving resilience or decreasing vulnerability and, improving financial health. And they all look at, the combination of, savings and credit and loans and whatnot. And yeah, we have the built-in evidence base there. So that's just to say it's not just one aspect, whether it's just loans, but it's a combination of all of them. They all enable different aspects of financial health. And then we also have a question from Lillian saying, did your study consider where the investors monitored unintended negative impacts of loans, for example, over indebtedness?
That is a great question, Lillian. Two quick points there. So if you look at the full report, you'll see in our sample overview section that a pretty large subset of this study's sample of investors also participated in our impact measurement, state of impact measurement and management survey published earlier this year, where we explicitly asked investors to report on whether they measure negative impact. So you can see those results there. The large majority of investors do account for negative impact in this financial inclusion study. And second, that's something we tried our very best to not just report the numbers, because we're aware access to banks and access to loans simply isn't enough. So throughout, we filter investments based on whether they provide client protection policies, whether they analyze the repayment capacity before they provide loans, and whether they're aligned to industry standards and certifications like the SMART campaign client protection principles. And we hope that those are strong proxies for telling us that these are responsibly provided affordable loans, if that clarifies.
Excellent, thank you, Nova. And Fabian, I see now that you're, I think, maybe clarifying your first question about measuring and improving financial resilience. And actually what Fabian is wondering is how could investors be more engaged in helping businesses to improve the resilience of their activities? So I don't know, Nova, is this something that you guys looked at? I think this is tackling a little bit into investor contribution and what could investors do, and the different, roles that investor can play in, being more or less engaged with their investees. Is this something you guys looked at?
So in this particular study, this was looked at relatively briefly. We looked at, of course, how the investor engages with the end stakeholder, including the investee organization and the MSMEs that have been served. We also look at the level of TA or non-financial support that the investor provided to investees, but we don't deep dive on this particularly in this study. But Leticia, and I'll let you speak more to this as well. Our recently published R3 Coalition reports also really look into specific examples and case studies for how impact investors are helping small businesses improve resilience, particularly in times like this. So I would also encourage you to look there. But for this particular study, it's mostly that stakeholder engagement metric. And we did find that 33% of all investments in this sample reflect stakeholder perspectives in product service offerings.
Awesome, thank you, Nova. And also to mention to the group, one aspect that we're looking at into furthering exploring next year is into investor contribution. And so as you know, on our Plus core metric sets, right now what we have in investor contribution is just it provides an overview, looks at what the different strategies that investors can use as outlined by the Impact Management Project. The industry doesn't have metrics yet to measure investor contribution. And this is something that we would love to tackle hopefully next year. So you'll be hearing more from us coming to you when we're ready to kick off that work, and would love to work with you all on refining and understanding what's the best way to measure that.
Great. Thanks, Leticia. With that, in the interest of time, I think we should move on to our analytics demo. Sorry, I will just quickly change my screen share. Okay, sorry about that. let's see. Okay, great. Okay, so here I'll show you, sorry, I will explain all of this to you very shortly. And I'll show you one of our interactive dashboards and what they look like on the back end. But you can also find these on the GIIN's Research and Iris Plus web pages, where they come in the form of stories or a series of dashboards that provide a deeper overview into the results. For example, if I quickly show you stories, you'll see that there's a sample overview dashboard, which is some of the information that we walked through in this session today. And you'll get to see the investee types that are in this sample. You'll get to see how investment characteristics vary across investee types and so forth. We also have a calculations dashboard to provide a clearer understanding of how this analysis was done and all the assumptions that are in place across each of these pathways. For each of these 4 outcomes, we're providing not just solely quantitative data, but also accounts for indicators of quality, as Lillian, you touched upon. For example, filtering by whether these loans analyze repayment capacity or enable first-time access to underserved populations. That said, let's move on to the highlight dashboard that I'll walk you through today. So, impact in financial inclusion is multidimensional, involving a range of impact metrics, target stakeholders, and investee and financial products and services. This dashboard is aligned to the 4 impact pathways we walked through. If we focus on the left side, each of these metrics is a key Iris Plus metric that corresponds to each of the pathways in the order in which they were presented to you. So let's start with this left side. Each bubble you see here represents the impact associated with a single investment during a 12-month period. The small boxes you see underneath list the average or typical impact achieved, impact achieved by the typical investment over a year. But we also see the dispersion here and the volatility, pretty wide range. On the right side, we add some color to this impact beyond the how much and into the who and the how dimensions to further contextualize this performance. And putting these all together, you see these filters on the top right to help you understand how your impact compares to your peers, how investments accrue impact over time, as we see with this scale here, which can help shape timing around exit and objectives. You can also see how impact varies across the type of target returns, the investee's stage of business, and the type of investees. All of these can provide valuable insight during investment decision making. For example, if we only look at investment seeking market rate returns, I'm just gonna remove these 2. So yes, here we see investments that seek only market rate returns, and we see really strong performance among those investments across all these impact metrics, and particularly in providing basic service loans. But anyways, I won't get too much into it in the interest of time, and I want to keep some time for Q&A as well, and let Leticia wrap up. But I really encourage you to play around with these in the GIIN Research website and the Iris Plus website. And please let us know if these are helpful to you and what additional metrics or filters could make these even more helpful. We're really excited about the progress that has been made and really truly inspired by the leadership in this session today. I know we have some study participants here, so again, forever grateful for your participation. We'd love to continue engaging all of you in the multiple pieces of collateral that we have available, the reports, the dashboard content, but also as we expand our work on this front and continue to refine these. In the meantime, as you can see in this little box here, please share any and all feedback with us, along with questions you have at impactperformance@thegiin.org. With that, I will move back to our slides and pass it over to Leticia.
Awesome. Thank you, Nova. So if this is the first time you're looking at those tableaus or analytics, we know it might take a little bit of time to digest and see what's in there. So by all means, please go check them out, see what's helpful, what's not, and let us know. But also, if you have any thoughts right now or questions about how this works or whatnot, please let's use this time. I'll go into what's next, but we still have a good amount of time for Q&A. I also see, Lillian, you have a thumbs up on your name. I don't know if that was maybe trying to raise your hand, and I don't know, maybe the raise hand question doesn't work here.
Oh,
but
it's just saying thank you for I like the answer to my question. So I'll put my thumb down.
Oh, awesome, thank you. Super. Great. So, Nova, can you back to the slide?
I just figured I may have removed this slide too fast in case people had questions. But, we're happy to take them at the end of the presentation as well.
Yes, by all means. And again, please use the chat box or unmute yourself with any questions, reactions. And as we said before, I think the three things I would love to know from you all is, the first one is, are these resonating with you, or are they surprising? When you think about your own impact investments in financial inclusion. The second question is around, how can these help with your decision making? Do you find this helpful? And what more of these, if you will, or what different versions of impact performance analytics would it be helpful for your decision making? So as you know, this is something that is new in the market. It doesn't exist before, and we're building it together with you all. So we need your input to shape what these performance analytics will look like, so that they are as most helpful as possible to you all, so we can get to that dream we're talking in the early slides about, social and environmental impact data being integrated into all decisions that investors make. So please let us know, what else do you need, and what of what you're seeing here is helpful. So I'll pause here, and I'll give a little bit of time for any comments, reactions, or thoughts, and then we'll talk about what's next.
Bringing it back one last time before we move on to the slides again.
I have to say, I've done this before when we're developing Iris Plus, when we're going from Iris to Iris Plus, and I've called people a lot. I try to not do it because I don't want to put you on the spot. But please, there's no, don't be shy on asking any questions or thoughts. This is what we're here for, to show you all what we have and get your feedback. So this is really valuable time for both us and you to share any thoughts, comments. Okay, yes.
Oh, I just had I thought it's slightly unrelated, I guess, but I was just intrigued to understand, is there any efforts to collect data that would allow kind of benchmarking with the wider industry? So for example, it's great having this data on percentage of women beneficiaries, et cetera, but it'd be good to understand how that compares with the wider industry in a certain geography. Does that make sense?
Yes. Oh, I love this question. Sorry, there's so many screens. I can't, who's speaking?
Oh, sorry, it's Lillian. I'm from an organization called RSA Partners.
Oh, great. Thanks again, Lillian, for this great question. We are really, really keen to unpack exactly those insights. And our hope is that with more data and with additional participation from investors, we could, this is a big first step in that direction, but we're already at work to create dashboards where an investor will be able to see how their performance compares to their peers. We actually already have some in the work, which you will see soon. You'll get to see, say, where your particular investment stands by, say, inputting your impact data, and you'll get to see where those of your peers stands. And we are actively working in that direction at this stage. It's particularly in the sector level. So it would be for financial inclusion, it would be for clean energy, and it would be for agriculture. And in the near future, it will also be for our other sectors around quality jobs and climate and housing. But definitely something that we're actively working on. Leticia, I don't know if you wanted to add anything to that as well.
Super. No, no, I think you've covered it. Well, sorry, we have one question also from Fabian saying that, asking whether this will be shared later, and the dashboards look great as well. So yes, we'll show you, I think my colleague Rachel posted on the chat box here, the link to where to see these interactive dashboards. We'll show you also in a minute where to find them on Iris Plus as well. And yes, we will share the presentation, the slides, and the recording. We'll put them on the Iris Plus website, where we always post all our materials after webinars. But knowing that we only have a few more minutes, let's move to what's next. And please, if you have any other thoughts or questions, feel free to put them in the chat or unmute yourself. So as we mentioned, this is a webinar series. It's a 4-part webinar series. We did the first session last Tuesday. That was an introduction to the work that the GIIN is doing on impact performance. Today, we're talking about financial inclusion. Next week, we're talking about the study looking at agriculture investments. And then on December 2nd, we're going to take a deep dive into what is the methodology that goes behind this impact performance analysis. And we're actually releasing the methodology for public comment period. So if anybody's interested in taking a look at that and sharing your thoughts and comments, we'd love to get those there. The public comment period, Nova, you have the dates better than me. I just have here November to January. Do you have set dates on when it's launching?
Sorry, Leticia. November 12th to the end of January. Okay,
so launching in 2 days. So you'll hear from us on that. And then, as we said, quality jobs and climate change mitigation have launched on our Navigating Impact Project website. We open public comment period today. So this is the moment when now we take, everything that comes out of the Navigating Impact Project, and we standardize it into the Iris Plus format, if you will. We build a core metric set. So public comment period open for those. Would love to get your input on those. And we continue to, and we're on also the next, impact performance studies are going to look at quality jobs and climate change. So as you can see, the work here is coming together hand in hand. And then, as you know, we're in ongoing development of Iris Plus themes. So some of the ones we have next on the pipeline are sustainable agriculture, which is already ongoing, clean energy, racial equity, and biodiversity. And then we're also in ongoing data collection for all of these areas where we have impact performance studies, clean energy, agriculture, and financial inclusion. So we'll, on the next slide, I think we have so where you can find more. So on the Iris Plus website, if you go onto the outside menu on data, there's a tab on impact performance analytics. There you can play with some of these. The ones that we have there are not interactive. So the ones on the GIIN website are a little more fun to play with. But what we do have is another tab that says contributing data. So in that tab, we have the 4 studies that are available to date, as well as a link to the Excel templates to contribute your data. So if you'd like to share your data, we are not, as Noah mentioned, this is an ongoing data collection process, and so as we move forward, we'll continue to upload data, we will continue to shape what these analytics look like. So feel free to share your data with us that way. I think Nova might follow up with an email with a link to that as well. So you can find, yes, more on both on the GIIN's website and on the Iris website. And we have another question or comment from Wally. Great work. To your second question, yes, did this resonate? I found your insights and how usage is really key to be quite helpful and revealing. Thank you. Well, thank you all for those who participated in this important work. And if you haven't participated yet, but you would like to, as we said, the templates for sharing your data, those Excels are all available. So feel free to do so. And if you have any questions, the research team will work with you to answer any questions you have. this is really how, we together are continuing to build the industry and push forward on this important topic of understanding impact performance. We can't make decisions out of gut or in a black box. We really need to know how our investments are doing and if we're moving the needle together as a sector, as impact investors, and all these different themes. And this is how we'll know. So this work is incredibly important. This is why we're so excited about it. And thank you all for being on this journey with us. And we look forward to much more to come.
Thank you so much, everyone. And yes, as Leticia mentioned, I'll follow up with a link to our downloadable questionnaires, as well as some other information for our upcoming webinars. Thank you so much.
Thank you, everybody.